Welcome back to Upside Down Data. Let's talk about Bitcoin. So Bitcoin had its first major red day in a while, just as I'm recording this. So we've just closed that daily candle and started the new one. And this comes after a very impressive rally for Bitcoin. We can see that we rallied off of the very lows here down in September. We rallied all the way up to almost 80% up to the upside, which is quite nice. And I think this was a very nice thing to see in the crypto market, where a lot of people were getting very doom and gloom, especially down here. A lot of people said that we're going to go back down to, 20K, we're going to go back down to 12K or something like that. This was a very nice thing to see instead of that. But more recently now, with this drawdown that we had, a lot of people are now questioning, where are we going next? Can we continue the rally for Bitcoin from here? Or is this a sign of things to come? Maybe we have a deeper correction to come after this. So what I want to do is I want to go ahead and take a look at the data, see what the data suggests might make sense for Bitcoin in this current situation. I think the first thing I would say is that this is not a panic situation by any means. Frankly, it's never a time to panic in markets, and I don't think this is necessarily that. Let's just look at what the data and see what they have to say. So actually, a few days ago, I was already kind of leaning more in the cautious side with Bitcoin. I thought there might be a chance that we could have some kind of a correction soon. And one of the things I was looking at when I was making this statement here was where Bitcoin's risk level was right now. So this is our long-term upside downside potential indicator, or UDPI. And as I said, it's a risk model for Bitcoin. So basically higher values mean higher risk, and then lower values mean lower risk. And one of the things that I was mentioning when I looked at this is that, so the long-term UDPI cares about moves that play over months to multiple months. So it's very much more longer time frame in its preference. And you'll notice that we don't get to current risk levels very often for Bitcoin. Now, the good news about this is that we really only see these risk levels during bull markets. So for example, here, for example, here and here, here, and over on these two times, this is all happening in a bull market. When we broke up to these risk levels, these were all bull markets. So that's the good news here, is that beyond this, there's a plenty of data that suggests that we are in the early stages of a bull market, which is really exciting. And I think that's something that a lot of that excitement has come out in the recent weeks. But this is just one more thing we can look at, that you just don't see this in a bear market. This very much looks like a bull market behavior. But the flip side of this, kind of the more cautionary part of this, is that unless you're ripping off to new all-time highs like these times here, oftentimes getting to these risk levels happens close to when you have notable corrections. But importantly, those aren't forever corrections. Things do generally recover. As we see each time, things went on to make new highs after that. So this is not really even a bearish outlook in the long term, but shorter to medium term, what it might suggest is that we've gotten a bit overextended. And unless we can just blast off to new all-time highs, we might need to catch our breath here. And that could just mean consolidation around current levels for a protracted amount of time. That could mean correcting down to lower levels, one way or the other. But that might be a way to let risk cool off, like we see in these times. Risk cools off, comes down, and then that gives us the stage for that next leg up that comes later on. So it wouldn't be a negative thing. In some ways, I would see this as a healthy market dynamic. If we can cool off from current risk and then let things reset a bit. Now, there are a lot of people out there who are calling for new all-time highs right away for Bitcoin. A lot of people are saying that we're just going to go on even before the end of the year. Some people are saying we're going to go ahead and set in new all-time highs. Certainly possible, and I'm not going to be complaining if we do. Certainly, I would not be upset at all if we did just clear out the new all-time highs. But I personally think that that's probably not the case. I don't think we're really at that stage in the bull market yet where we would necessarily expect this parabolic action like you see here, for example. You might see it more like maybe 2019 or or even mid 2013, although it wasn't quite as parabolic to get us there. But something that's more of a mid-cycle high, and then maybe we have to correct a bit, spend some more time down there, and then we could maybe rally a little bit later. Now, I'm not saying this only based on this chart. There's more things that are feeding into why I think a correction could make sense here. So let's talk about those things. So one of the other models that I'm looking at here is our Trend Confidence Indicator, or TCI. So this is a trend model, as the name suggests, and it's really looking at the strength or the health of a given trend. And the idea is that if the TCI is trending up and the price trends up with it, that's a good sign. But if you start seeing the TCI trend down, that's a concerning sign, and price often will follow. And with every rally we've had so far this year, that has played out, where we've had an uptrending TCI, price will then follow. TCI then starts to trend down, price trends down with it, reversal on the TCI, reversal on price, so on and so forth. And with this rally here, we had pumped, TCI had moved up pretty aggressively. In fact, the TCI had been moving up all the way through here, which is a bullish sign, something I talked about at the time, building strength in Bitcoin. Then off to the races we went with price moving up. But now you see the TCI moving down relatively aggressively here. And so it did break a bit for this pump here, moving back up, but now it's collapsing back to the downside once more. And so this is a concerning sign. We'd really like to see the TCI reverse and be able to rally with Bitcoin to be more confident in a sustained rally. Now, again, this doesn't, just because the TCI is trending down doesn't mean that Bitcoin can move up. I mean, it did it here, but then the long-term sustainability of that might be a little bit more questionable. And it might be that we're kind of getting a little bit overextended, have to have that cooling off, and then let the TCI come back down, find a base, move back up to then bring price up along with it as well. So we're gonna have to watch it and see how that plays out. But that's one of the things I'd like to see, and one of the things that has given me a bit of caution, again, short to medium term with Bitcoin. And the final thing I'll point out, and this goes beyond Bitcoin, just into the broader markets, is that other assets have gotten quite hot in this recent rally. And that's a good thing in the sense that really nice returns have come from these assets. Take, for example, Solana here. Solana pumped off of its September lows of $18. It's now trading up above 70. That's pretty darn remarkable. That's pretty impressive. I think anyone holding Solana has been very happy about this. But things can't go vertical forever. And what our long-term upside downside potential indicator for Solana is saying right now is that we're getting pretty hot here. We're getting to a point where the realistic downside potential is starting to weigh quite a bit more heavily than the realistic upside potential from this point. And we might think that some cooling off, like for example, we saw here, cooling off might be needed to, again, let things reset and then allow us to move up a little bit further. And a lot of this has to do with market positioning. So when we talk about what happened with Bitcoin here, what's really going on here with these flushes is that it's the derivatives market where a lot of this is happening, where people opened up their margin positioned or leveraged positions on the long side. Too many people were risking things on that side. Price moved against them and they got liquidated, forced to sell, and all that forced selling creates these really nasty capitulations. And what you really like to see for uptrends is actually the opposite, a short squeeze, when everyone's piling in on the short side, so that when price starts moving against them, they all get liquidated and pushes price up. In fact, that's exactly what we saw back in October, that as price started to move up, a lot of people, we actually saw this in the derivatives markets, were piling in on the short side. They didn't believe it. They thought that it was just going to crash. And then they got squeezed and then pop, up we went. And a similar thing happened here again. There were some short squeezes that catalyzed this movement up here. But now we might start seeing the opposite, where everyone starts kind of going in on the long side and then getting liquidated and moving back down. And so we'd like to get the market to be a bit more balanced. We'd like to be the case that just a slight move to the downside doesn't just liquidate a bunch of long positions and catapult price way down. We'd like to get to a place where there's at least more balance between longs and shorts, or even where people are overall short, so we can squeeze that and push it to the upside. So I can always keep in mind with these markets. And so that's part of what can happen when you see an overextended market. As I was saying, Bitcoin, we knew from our risk model that Bitcoin was starting to get overextended here. What can happen is that when the market's going to get overextended, that's when people are thinking that things are just going to keep going up and up and up and up. And then that's when they pile in on the long side on the derivatives markets. And that can really then lead to those massive downside moves. So moving forward, it would not shock me at all to see a bit more of a correction for Bitcoin and the rest of crypto here. Now, that's not to say that everything is going to correct. I think there's going to be different altcoins that could continue popping off, doing really well, but it might just not be this up-only environment that we've been seeing for the past number of weeks. But if we zoom out, that's not really a bad thing. In fact, that's probably a good thing from the broader perspective. And this is something I think is really important to talk about. So a lot of us who have been around the markets are still somewhat traumatized from what we experienced here during the bear market from late 2021 through 2022. That this experience made us think that any correction is just something that is to be avoided and is kind of terrifying, because a correction in a bear market will tend to lead to new lows and more pain and things dropping further and further than you ever may have thought was possible. But in a bull market, it's a very different situation. In a bull market, when you get corrections, those are oftentimes gifts. They're opportunities to reacquire, and especially for altcoins. So I'm going to put up the ADA chart here just as an example of what I'm talking about here. So with ADA, you can imagine that, for example, coming off of the 2020 lows, this was a pretty face-melting rip to the upside. A lot of people probably felt FOMO towards the end of this, wanted to pile in, feeling like they might miss it. And then we got this correction. And that was probably really scary at the time, especially anyone who was buying up here when I thought, oh, what did I do? I just bought the top. Now price is collapsing. In fact, price from the absolute top of this wick here down to the bottom was down over 50%. That would have felt brutal. But in reality, in that bull market, that was just a huge opportunity that if you had bought at the bottom of this dip and held to the all-time high, that's over a 3,000, it's a 3,300% move to the upside. Whereas someone who had bought the local top here would have only been able to sit in it for about 1,1700% move. Still nothing to laugh at all, certainly, but not nearly as nice. And that's one of the nice things about a bull market in a lot of ways, is that even if you do FOMO in at the top, you will often eventually get bailed out by the market, and the market will go up higher, and this will actually ultimately look like a pretty decent time to be acquiring, even if it wasn't as good as the dip. But it's really these dips where the real money is made during the uptrend. Obviously, the most money is made buying at the absolute bottom, but assuming we are now in a new bull market and a lot of altcoins have put in their absolute bottoms, we're past that. There's nothing really we can do about it. That's just in the past, if that's the case, that happened. But the good news is that's probably not going to be the only nice buying opportunity we can have. And dips happen in bull markets. That's just the way it is. Things don't go vertical forever. And so there will be opportunities. And so that's where I think reframing it can be helpful here. That right now, I don't think anyone's especially afraid of what happened here. I think we've been kind of going up so much that a lot of people are just laughing this off, saying, oh yeah, you call that a dip, whatever. We're just going to keep rallying. And maybe we will keep rallying. But I think it also could very well materialize where we need to get to a point of more fear in the market. We need to get to the point where not everyone is just aping in on the long side and then getting liquidated. We might need more of that balance, as I was talking about in the derivatives market. And that might mean we need a deeper correction here, but that could just be a big opportunity. And especially if we get to a point where we correct, everyone gets fearful, everyone's scared, everyone's saying that, oh, never mind, no bull market, gonna go down to 12K or whatever they might say. But then if at the same time you see the data start to paint that more bullish direction, if we see, for example, the TCI start to trend back up, we see risk really cool off, then that is a great contrarian indicator that buy the fear and then reap the benefits as we might go up further. So obviously none of this financial advice. You should be making your own opinions of whether or not we're in a bull market or what might happen. And the normal caveats apply, of course, if we have a recession or if the stock market collapses, all bets are off. But currently, the data sure seem to look like we're in the early stages of a new bull market. And even though in the short to medium term, I do think it'd be reasonable for us to see a correction here, maybe have to test some lower levels, let some fear re-enter the market. Ultimately, that could just be a massive opportunity and something that, frankly, a lot of people would miss out on, because that's what happens with markets. People let their emotions get the better of them. They don't buy in those opportunities, and then they just end up piling back in after prices already moved up above the prior local high. And that's why we have models here at Upside Down Data. That's why we have models over at polaritydigital.io, our website, link in the description, so that we can ignore those emotions. We don't care about that. We care about what the data say and what the data are suggesting. Because I don't know about you, but I personally would much rather follow objective evaluations of the market by models that can see the things a lot more clearly than I can in my own subjective, biased human perspective. And I don't want to be listening to the narratives on X or the emotions that are over there, because those, generally speaking, will make you buy high and sell low, which is, of course, the opposite of what we're really trying to do here. All right, so if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates about our models and more over there. And of course, if you're interested in viewing live data from our models and more, you can go to our website, polaritydigital.io, link in the description.